The question on every financial mind: why does the US dollar still dominate the global stage, even looking ahead to 2026? Despite ongoing debates and predictions of its decline, the greenback maintains an iron grip on international finance. Today, we break down the enduring reasons why. Welcome to our deep dive. We'll explore the economic, structural, and geopolitical factors that solidify the dollar's position. This isn't just about American economic strength. It's about deeply entrenched global systems that rely on the dollar's stability and ubiquity. Globally, the US dollar remains the dominant currency for central bank reserves, international lending, and cross-border payments. It acts as the backbone for international trade, meaning transactions between two non-US countries are often priced and settled in dollars. Every few years, new headlines predict the dollar's imminent collapse or replacement. But these predictions often overlook the enormous inertia built into global financial systems. A transition of this magnitude is not swift. It takes decades, and the alternatives simply aren't ready yet. Let's examine the foundational pillars that support the dollar's status, starting with the system that prices global energy. The petrodollar system mandates that oil and natural gas be priced in US dollars. This creates constant, massive, and necessary global demand for the dollar, ensuring it is always circulating in international markets. It's a foundational link between global energy and US currency. When global crises hit, investors and central banks rush to safety. The US Treasury market, backed by the US government, is considered the world's most secure and liquid asset. This, quote, safe haven status consistently reinforces demand for the dollar. Beyond economic strength, the dollar benefits from deep structural advantages rooted in the US financial ecosystem. The sheer size, depth, and openness of US financial markets are unparalleled. Trillions of dollars of assets are traded daily, making it incredibly easy for any institution in the world to buy or sell dollars without moving the market price significantly. This high liquidity is critical for global commerce. The global payment infrastructure also favors the dollar. The SWIFT system, used by thousands of financial institutions worldwide, is inextricably linked to dollar transactions, providing the US with powerful financial leverage and control. If the dollar were to fall, what would replace it? The reality is that no other currency currently possesses the scale, liquidity, and credibility to take its place. The euro and the yen, the next largest currencies, face significant hurdles. The eurozone is politically fragmented and faces ongoing debt issues, while the yen is hampered by Japan's massive national debt and deflationary pressures. These issues limit their appeal as a primary global reserve currency. The Chinese yuan is often cited as a potential challenger, but it suffers from severe limitations. China maintains strict capital controls, limiting the free flow of the currency, and global investors remain cautious due to a lack of independent rule of law. Geopolitical stability plays an often understated role in reinforcing currency dominance. The dollar's status is intrinsically linked to the immense economic and military power of the United States. This exorbitant privilege means the US can borrow cheaply and exert global influence through its currency, a privilege unmatched by any other nation. Many countries talk about de-dollarization, but few are willing to bear the massive financial and logistical costs of dismantling the existing dollar-centric system. The path of least resistance remains using the dollar. In short, the dollar's reign is protected not by a single factor, but by a powerful synergy of systems. For the foreseeable future, until a credible alternative emerges with equally deep and open financial markets, military backing, and institutional trust, the US dollar will retain its status as the world's preeminent reserve currency into 2026 and likely well beyond. However, we must remain vigilant. Long-term structural challenges, particularly concerning US debt and the potential for a new digital currency to disrupt the payment system, are the real threats to watch, though their impact is unlikely to fully materialize by 2026.